Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
You're watching CNBC Africa, first in business worldwide. This is Share Shootout, the most vicious stock-picking show on TV. I'm Bruce Whitfield, judge, jury and executioner, and occasionally I set people on fire. Were Rampele and Zilla trying to outshine Madonna and Britney when they locked lips? Just how serious is the management contract, the marriage between the DA and the Khang, now known as Dacha, is Malusi Gigaba going to heal an ailing SAA? Those are the impossible questions. We do not know how to answer those questions. What we do know is we still have a guy who loses to his old man on the golf course. Who doesn't? And another who not only lost his sense of balance, but his creativity. This is not a repeat show, but rather a rematch. And today, there will be a winner if we have to drag one of them kicking and screaming out of the studio. Enjoy introducing our three-week champion. 3 appearances, 2 wins. Nick, the Wolf of Maude Street, Crail from RMB Private Bank. He takes on the man with 11 appearances, 8 wins and 3 losses, Gary Gordon Gecko of Sandton, Booysen from Vunani Private Bank. The house rules are the same. Our guests have pre-picked 3 shares. Kind of like poker, neither knows what the other holds, but they must accept at least one of their competitors' picks. Otherwise, the longer they leave it, the more likely they are to have to accept something they really don't like. Each has got 30 seconds to argue their stock pick, so let's let the share shootout begin. We've never had a draw before. We've never had 2 men so equally poised and equally balanced. You saw Gary doing warm-ups.
I did.
Doing neck stretches.
It was scaring. It was scaring. Feeling intimidated.
We had to start before he got to his groin.
Yes.
It was going to get very... Okay, it's too late now. Nick Crail, because you're top of my list, I'm going to make you go first so I don't get confused. What an entertaining pick, because here we've got a particular problem. Last week, the Reserve Bank changed the rules of the game. They changed the rules of the game because the Argentinians and then the Turks in a very big way went and changed the rules of the game by upping interest rates. Suddenly, everything with even remotely interest rate sensitive has hit the floor, and you've had to be very careful in your picks. So, in 30 seconds, tell me why Illovo is sweet.
Illovo is sweet mainly, I think, because of its exposure into Africa, into the African consumer. I mean, there's definitely going to be an increased demand for sugar, so that's going to be very nice. It's a cash-generative business, pays out a nice dividend on that sort of side of things. And ultimately, I think it is going to be sweet in a portfolio over the long term.
Does everybody, however, love Illovo? I've wanted to use that line forever because that was the old payoff line in the 1980s. Yeah, it's still ticking. You've not freaked out by that, little Gary. Boom. No, his 30 seconds
are
up.
The usual psych me out tactic. Okay.
He's trying to psych you out.
Okay.
Now, Illovo. Give us a sense of what you think of Illovo.
Yeah, I mean, Illovo and Tongaat, I mean, I think that if you look at the share price, you'll see what the problem with the companies are. They've been very, very poor performers, and a lot of that has come from, just very, very subdued sugar prices. I mean, the sugar price has come down quite dramatically, and I think there's in the last couple of years, I mean, there's been a glut in the market, so that's really been the problem, and it's difficult for Illovo to really generate supernormal profits when your commodity is not really selling for the price that it should, or at least that you would like it to. I mean, I think overall as a company, it's very nice. I mean, I like the whole sugar manufacture process. I think it's very nice. It's a very efficient process. I mean, they burn off the cane afterwards. They generate their own electricity. It's a nice storage stock. But I mean, for us, it has come up on the radar as perhaps a value play at these levels. But until you see sugar prices recovering, it's not one for me.
It's trading at a fairly decent multiple. I mean, 12.5 times historical earnings. It's not deep value by any stretch of the imagination. How long are you prepared to wait for this one to solidify?
Well, I think, it is something for the long term. It's very similar to saying, the African consumer is going to be using a lot more sugar. This is not a story that's going to play out in February, of this year. It is something that is more of a long term. I do think, though, and Gary points out or makes the point that valuation really does come into it. What's being priced into the stock at the moment has been very much a sliding sugar price.
What about the trend against sugar? What about the trend against sugar? People have been turned off smoking in developed markets because smoking is bad for you. It will cause cancer. You will die. More and more studies are pointing towards sugar as being massively bad for us. Tim Noakes is on the big, you take sugar, you might as well be taking arsenic vibe. Is that threat big enough in terms to the sugar industry? It will have put enough people off sugar. Is sugar so wonderfully addictive, like nicotine, that sales will keep growing?
So I think in the developed world, you potentially could have an argument. I mean, there is so much sugar and there's so much consumption of that sugar, but really where we're looking here is the emerging market consumer, where there isn't McDonald's anymore. Their sugar isn't at the moment. They're not having any sugar intake. As you get a little bit more money in your back pocket, then you start putting it in your tea and your coffee, and it really is coming off an incredibly low base.
And sugar is status. In some societies, sugar is status. I once watched a security guard put 7 spoons of sugar into a cup of tea. And then
Don't you do that?
He didn't stir it. I said to him, Guy, why are you stirring? He says, no, then it's too sweet. But there is a level of, I am at work and now I can have 7 spoons of sugar because there is sugar and I can have this. There's an argument to be made there. However, you do not buy the argument and you obliterate
No,
it.
I've got to shoot down. Yeah, and I think I really take your point on sugar related to diabetes. I mean, I remember when I was a kid, we went to the Komati Port sugar pool. I mean, they were just giving us handfuls of sugar to eat, and you'd never
Getting you addicted.
You would never get away with that. I think regulation. I don't know. I don't know if that's going to play a huge role in the near future, but it's definitely something to consider on a long-term pick. So
your teeth are remarkable, despite the stuff. So Gary Booysen shooting down Illovo this evening. Gary, let's go to you then and see whether or not. Let's talk about addiction, shall we? Gary Booysen from Vunani Private Clients. Sure, it's nearly R1 trillion company. It doesn't have much further to go. At $600 a share, it'd probably be worth close to R1 trillion. 875 billion rand is the valuation on SABMILLER under new management. In 30 seconds, tell me why you like it.
I mean, SAB is the blue chip among blue chips, so you can't argue that. I mean, the valuation has come down, recently. I mean, a PE of sort of 30. They had that surprisingly good results last time. I mean, not spectacular. It's not a growth company. It's the banker in your portfolio. I mean, it's high barriers to entry. It's half the world's beer market. It is focused on emerging markets, premium brands. It's a good earner. I mean, it's a great company. And I think in a rising rate environment, you need to stick a little bit defensive. A low beta stock like SAB, you're not going to go wrong.
Is it sufficiently defensive though to appeal to Mr. Crail?
It is.
It is.
It is.
It is.
There's a taker on the table, and it's me.
Okay, excellent. I mean, yeah, it's expensive. It is global. It is globally diversified. I can't see where the next big acquisition is going to come from. The last one has sort of been bedded down in Foster's in Australia. They bought a bunch of brands along with that. What is it that appeals to you at a 27 times multiple?
Well, I think a lot of that multiple has been priced in, some rand weakness that comes into it, number one. Number two, or what I would really like about it, is their emerging market consumer. So in that environment, specifically other beer sort of manufacturers that are of relative scale have one brand. This is the brand we have. We push it out to all the consumers. This is what we do, whether it's Heineken or ABI. But what SAB does very differently is they go in, they create a sort of a market that's there. They find the local beer and then they sort of produce that. So it's a different type of model, but it's that global reach, global exposure.
Okay. What about new management? Mr. Clark has been around for a long time. Alan Clark, growing up in the shadow of Graham Mackay. Graham Mackay, of course, tragically died in December last year, so that leadership element is gone. Maya Khan has retired. Alan Clark is now at the helm of this huge organization. He's run Europe. He's run many of their operations. He's a strong operator.
No, definitely. I think I actually checked it before. He's been there for 24 years at SAB. So I mean, he knows how the business works. He's been chief operating officer. He's got a good track record so far. He might not be quite as acquisitive as Graham Mackay was.
There's nothing left to buy.
Yeah, but that's it. I mean, how can you be? But I think SAB. It's going to be difficult. I mean, I still rate him as a manager, but it's going to be difficult to steer SAB wrong. I mean, to be honest, I think when you've got such a competitive advantage, when you're already established in these markets, I mean, it's going to be difficult for him to mess this up.
The business I want to see them buy is the French family-owned Africa brewing empire of Castel. If they can get that, then they own the African continent, and then they are the big gorilla in the fastest-growing emerging market in the world.
So there are some opportunities. That opportunity has been around. The opportunity, unfortunately, hasn't really been around. They've been very keen to
They've got an
make that
option.
acquisition.
They've got option of first refusal.
Yes.
On that,
So hopefully at some point it might sort of come through. But I think the point is made. You're not buying this because of their fantastic growth prospects necessarily. You're buying it because it's a behemoth that really can't go wrong. in a massive sort of way. Obviously, share price short term.
Okay, but you like it and you're taking it.
Taking it.
SABMILLER gets the big thumbs up. Well done to you, Gary Booysen, first out of the blocks. And I look at the rest of your picks, and he would have been, he would have a problem. I think he's going to have a bigger problem now to reject the other two, which is going to make it interesting. So let's move on, Crail, from RMB Private Bank onto your pick number 2. It's only fractionally smaller than SABMILLER. It is the mighty BHP bulletin in 30 seconds. Tell me why.
I think you've got to like this company. In South Africa, what we have sort of access to in terms of mining, it's a great diversified miner. It's got fantastic assets. It's got good management. We really like the sort of petroleum or energy side of the business, which differentiates themselves quite largely relative to something like an Anglo's. I think, again, it comes down to it's not a growth stock, but it's an anchor in a portfolio. And in these sort of uncertain times, this diversified and size behemoth is where you want to be.
Do I get a sense that you two guys have gone to the chicken school and following the interest rate announcement of last week, you've both got just a little bit jittery and a little bit twitchy. Is that a fair assessment?
Maybe.
Okay, BHP bulletin. I mean, you don't get more boring than that, do you, Gary Booysen?
Yeah, I think you do. I mean, as much as it's a behemoth and well diversified, I mean, it's a resource company still, and I mean, they're subject to commodity prices. So, it is a higher beta stock. I mean,
where their markets? Their biggest market has got to be China. The biggest market has got to be a recovering US.
Yeah, recovering US. China slowing down. Manufacturing numbers again last week. Disappointing. I mean, I still like the whole China, commodity-driven story. I mean, I've talked about it at length. I don't even want to go into it again. But it's, I mean, China is definitely slowing down. It's changing from an infrastructure building economy.
It is not falling off a cliff. There's some risks. There's some
to build a bridge takes a lot more commodities than to make a pair of scissors to cut some hair. Yeah. So for me, I'm steering clear of commodities. But the problem with that is they are high beta. I do like BHP. Out of the whole, sort of commodity stable that we have available to us, I'd probably say BHP is the best. And if you're building a full diversified portfolio, not of 3 stocks, of 20, BHP's got to be in there. But
we're building a portfolio of 3 stocks.
But we're building a portfolio of 3 stocks, and for that, I'm going to have to shoot it down.
You're going to shoot it down. A very courageous move.
I think if you're buying this as a sort of a banker, low risk type company, I think that I mean BHP will move 5-6% in a day. I mean, you can get a 20% knock on that in a week. I mean, it's not exactly low risk.
Okay, a response to that, Nick?
The sponsor, I think it comes down to valuation. I mean, what you say is 100% right. I think the long-term trend on commodities in general is going to be downward. Reality here from a South African investor is a lot of those earnings, and specifically in the short term, are coming through and getting buoyed up massively by the current weakness in the rand. But moreover, we've seen these shares beaten down to such an extent that over the last sort of 6 months, it's been our sort of top performers, and I think all the negative news is quite, has mostly been sort of priced in. So that's why I think it's a good place to be.
Okay, you're sticking with it and you're shooting it down. Despite the fact that you realise that he's got 11 in 3rd place. Okay, you're brave.
Should have taken
you're courageous.
Take it?
No, it's too late. You have shot it down.
Too late.
You shot it down. You shot it down. You shot it down.
Let me try.
Them's the rules. I told you it was vicious. I told you it was cruel. I told you it was backbiting. I told you it was mean. And now you believe me. Okay, because your 3rd pick. It's hilarious. That's funny. That's funny. Okay, right. Gary Booysen from Vunani Private Clients. Your pick number 2, please. Your SABMILLER pick was shot down. Was accepted. It was accepted.
Accepted.
A big one. Accepted. There we go. It was accepted. But you're going to make a compelling case in the healthcare sector, in the South African healthcare sector, with a controversial exposure to the United Kingdom. Netcare has not covered itself in glory in the UK. In 30 seconds, tell me why you think it will.
Obviously Netcare bought Propco 1, 2, and all the properties, pre-subprime, and then got lumbered with this huge property portfolio. The thing is, looking at it now, I mean, they managed to turn around. Debt financing is going to come through eventually. They might sell off even if you look at that whole argument, it's not even relevant. Their OPCO in the UK is strong. They're the biggest UK private health hospital group, and I think if you look at their earnings, the earnings that are coming through from there are going to be strong. It gives it a rand hedge component. We haven't even talked about the SA business, but also very, very solid.
Okay,
and
stop
defensive in a tough time.
Okay, 2 points off. Didn't you cheat last week? You had an extra 15 seconds.
No. That's the only way it was a draw. And he was going to bring the video. Now what?
The video we refer to, of course, is the video of him flying from mountainside Michael Schumacher style, except he's with us. Okay, so Nick Crail, you have listened to the compelling argument for Netcare. Only stuck on the UK business. We know the South African business. If you want to get a bit chopped out of you, it's nice to go to a Netcare hospital. Chances are you'll come out the other side.
True.
In a few seconds, give me a thought on Netcare.
Well, I'm going to shoot this down based almost exclusively on what you said on the UK operations. For me, I don't think there is enough proof that they're going to make a success out of that operation. I think it's been priced in, so that's why they're trading relative to the peers that they have here, Mediclinic, Life Healthcare. They're definitely looking cheaper, but I think they're looking cheaper for a reason, and I don't think there is this evidence that that's suddenly going to turn around.
Okay, UK
and for me,
economy,
I would not be touching it.
UK economy growing at its fastest rate last year since 2008. We know that in times of austerity, people cut back, they rely on the state more, and the UK state functions well enough for you to be able to do that. You don't want to do it here, but you'll do it in the United Kingdom. The National Health Service is unlikely to kill you very quickly. So the chances are you might survive the NHS. In good times, however, when more people are being employed and where more people are having health cover and health insurance, and Discovery is doing okay with its Prudential joint venture in the UK, as that culture changes and the state can't keep feeding people with a silver spoon in the United Kingdom all the time, there will be the pressure to switch into private, or not.
Well, I think that might be true, but I think at the moment there's no guarantee which way the legislation is going to go in the UK, and therefore it's quite a high sort of risk that you're going into. If you get pushed with price.
I like that risk, Gary. I like the risk that the UK government will run out of funds to support the entire population on the NHS.
And I think recently, we've seen the UK Competition Commission also coming back and basically, leaving them alone. Netcare had to sell, I think, 7 hospitals on a whole sort of competition commission issue. They've stepped back and they've stepped in and said, no, it's okay. You guys can basically keep on operating. And just on the NHS as well, they've, in one of their businesses, they've managed to raise, they usually rely on insured patients and privately funded patients. Portion of their business was 1%. It was NHS customers. It's now up to 30%. It's low margin business, but they can survive even in tough times. And like you say, when it does switch, then they can, use those beds for more exciting things.
It's 2 against 1, but he's still not budging. I bet you.
No, definitely not.
I'll say my last word is, yes, it's probably not a great story to tell, but if you look at SOTP, dividend discount, our fair value on the stock is 27, it's trading at 22. That's a buy for us.
There we go. Not for you though, Nick Crail.
No, it's not a great story.
And he's shooting it down. Okay, let's have a look here. Gary Booysen from Vunani Private Clients. His SABMILLER stock pick was grabbed with both hands. Gratefully accepted. Nick Crail likes SABMILLER. Netcare, however, he thinks Gary Booysen needs a little bit of time in a nice bed with a nice man in soft, in a long white coat to help him get over his addiction. Nick Crail from RMB Private Bank, however, chose Illovo and BHP Booysen. Both of those have been shot down, which is interesting because Nick Crail's third pick on Share Shootout has been a dog last week as a result of a Welcome back. You're watching Share Shootout right here on CNBC Africa, first in business worldwide. This is Grudge Match Tuesday. Before the break, Nick and Gary, who were here last week, but we couldn't decide on a winner, gave us 2 of their stock picks. And so what we got from Nick Crail from RMB Private Bank was Illovo and BHP Booysen, both shot down. Stock pick number 3. Okay, but I'm going to make you go second this time because I really want Gary to swear. Because Gary Booysen, on the other hand, chose SABMILLER, easy sitting duck for Nick to accept, and Netcare shot down on the basis that Nick doesn't really believe in the UK story for Netcare. Right, so Gary, let's go into the final leg then with you on your final stock pick. I like this one. It's a nice Africa play. It's a food play. It's vulnerable to drought, but they've got a nice explosives business because the mining sector on the African continent is set to boom. In 30 seconds, tell me why you like Omnia.
Omnia, for all the reasons mentioned. I mean, agriculture doing exceptionally well, record revenues in the last reporting. The mining, I mean, forecast to grow at sort of 33%. Nice, the guys they service are open cast mines, easy. New nitric acid plant for their chemicals business brought their costs way down. And like you say, I think the fundamental demand for their products is going to grow dramatically. I mean, fertilizers, I mean, if we see a burgeoning middle class in Africa, how are we going to feed them? We don't have the arable land. You have to have fertilizers. You have to use technology to succeed.
There we go. Omnia is a tough one to shoot down.
Well, I think it's a different case in point to the last stock that I shot down. This is a good story. However, a lot of that good story is all priced into the stock. I think it's done very nicely over the last couple of years. I think on the back of this good story, question is whether you buy it now. I would say now you've guys have bought the story. Now they've got to deliver on everything, and you've now got the risk at this high price. For me, it's
okay. I look at similar stories, and I look at similar Africa growth stories and exposure stories, and those multiples are a lot higher. I look at Omnia as trading on that story at a much lower multiple, 17 or thereabouts.
17, yeah.
So it's cheaper than SABMILLER.
It's cheaper than the market average.
Yeah,
significantly.
Look, the market average is crazy. Let's be honest about that.
But at least it's dragging it down a little lower.
So what's their long-term PE?
What is the long-term PE then? What
I think it's about your forward PE. 1 year forward PE is about 14, I think, at the moment.
Okay.
So not.
But the historical long-term PE would be quite a bit less than the 17 that it's on at the moment, meaning that a lot of that has been priced in. And this is the best time.
But I mean, I think maybe priced in. I mean, we have at the same time, if we are looking at buying now, we've seen a nice re-rating backwards on it at the moment. I mean, shot up straight through the sort of the 220 mark and then back down to 210. Solid, 45-degree angle if you're looking for momentum.
Like, I mean, there's nothing I like more than a 45-degree angle.
I mean, yes, you can extend your chart and make it a little bit less of a slope.
Yeah.
But it is a solid performance over the last 2 years. I think it's up 50% over the last 12 months. I mean,
which is enough reason to not buy it.
I mean, you can't look at share price and say that there's no value in it. But no, I think the momentum definitely with the stock. I mean, guys excited about the stock and I haven't extended it yet.
Last-ditch effort to blow it away.
Last-ditch effort to blow it away. I think valuation is really it. I also think that it's still relatively small in terms of the company, which means that it has higher risks relative to
Can lots of Chinese people bring Chinese fertilizer and Chinese explosives into the African continent via different ports, coming through via Mombasa and sort of flood the east of the continent?
Yeah, I don't think so. Fertilizer is a lot more difficult to transport than something. And I think, like cost benefit on how much you pay for fertilizer, I don't see that as a real risk.
All right, but you're shooting it down.
Shooting it down.
And also, remember, fertilizer
shut down.
is a small part of it.
Shut down.
It's
shut down. It's over.
You had to shoot it down.
On to the final part of the show, and the part of the show that I've been looking forward to most, because I did expect you to shoot down a couple of shares, and because Nick Crail has taken this terribly seriously. Illovo, BHP Bulletin, you shot them down. You're going to regret it, because in a changing interest rate environment, interest-sensitive shares tend to get pounded, especially in the immediate aftermath of the interest rate announcement. So, Nick Crail, an incredibly courageous pick, I suspect, of Nedbank. In 30 seconds, tell me why.
I think, if you look at forget about the valuation and exactly what's happened on the interest rates right now, if you have a look at the makeup of the business, they're going to be going into Africa, hopefully sourcing or bedding down their deal mid-2014 with EcoBank. I think it's great management. I think they're playing on the cross-sell as well, which means they're not looking for new consumers, but rather existing client base, offering them more sort of products that go into it. I think it's a good story.
Okay, well, I'm still waiting for those calls, because I've been with them for 15 years and they're yet to try and cross-sell me anything, but maybe it's because of the way I respond when they try. Gary, now this is interesting. How do you accept a bank share?
I think you might be on the red flag list, because I definitely get calls from Nedbank. No, I do. Yes. How do you accept a bank share? You say yes, I don't shoot that. Nedbank's actually not bad. I mean, out of the financials, out of the banks especially. I mean, first round Nedbank are neck and neck for us as our favourite. So it's at least you didn't pick a retailer, at least you didn't pick ABSA for example, Barclays. But no, I think Nedbank's good. I think the EcoBank. I mean, we work quite closely with a lot of the EcoBank guys, and very competent, very well run. They inspire confidence in me. I mean, looking at the valuations, yes, obviously rising interest rates, we're expecting rising bad debt, but Nedbank also very much much focused on businesses maybe rather than the consumer, which is as under pressure, maybe maybe a little bit advantage over the other banks. Yes, difficult in a rising interest rate environment, but one of our preferred banks. So I will accept it with not too much of a blemish.
But what we've seen in the last couple of days, following the interest rate announcement, is the banks and the retailers got bludgeoned, and they were bludgeoned really hard.
Not for a year view, maybe a short-term bounce back as well. I mean, you can see that happen very easily.
There are two aspects to the way in which banks make money. They make money on the loans they extend, and they charge interest rates on that, and they get that, and they anticipate that their clients will pay them back. As interest rates rise, there's the concern that there will be defaults. But there's the other side of it, and it is the capital that they earn on the interest they earn on their own capital, the so-called endowment effect. At some point, that kicks in, and as interest rates go up, that's positive for banks.
I think in this environment right now, it all comes down to how long this interest rate cycle is going to continue, and for what sort of basis points rise is it going to get to. I think if you take where we were, a 50 basis points sort of increase, this is good news on their earnings. This is not bad news. People are not going to be forced into bad debt yet. Their provisions are not going to go up. I think you're probably looking at about around 150 basis points that will be still earnings accretive or good news for the banks. Anything post that 150 basis points is where bad debt becomes very scary.
That's where the damage
but in the short term, this is great. And then you've seen the bounce down. It's a wonderful time to go in.
Are you accepting this with the straight face, or are you accepting this with a slumped shoulder?
No, I'll accept it with a straight face. And I think our economic outlook, supports the case as well. I mean, last week we ran into our economists and said, "What the hell is going on?" She said, "Don't worry, it's not going to be more than 150 for the year." So that, and then she said,
We must leave it. We must leave it. Okay, I have to make a decision. Karabo, tell me what to do. Because last week we called it a draw, and I don't think we can get away with the credibility. We've got to be like the Reserve Bank. We've got to make the tough calls. So we've got Nick Crail from RMB Private Bank with Illovo, Booysen and Nedbank. We've got Gary Booysen with SABMILLER, Netcare and Omnia. Who is this week's winner, Karabo? I'm afraid that a great legacy on the show, built up in recent months, has to be terminated. Nick Crail, it's been lovely. And they call him a gentle giant, but actually he's a vicious and brutal battler. He picked the Nedbank share. I was holding it against him, but my producers have overruled me, so it is not my fault, and that way I don't get beaten up by either competitor. Join us next week as we get two people to battle out right here on the most ruthless stock picking show yet on television. Send the producer your accolades, your praise, your thoughts and suggestions at KaraboKTL, and then tweet me your compliments on @BruceBusiness, but only compliments, be nice. That's it from Share Shootout for this evening. Well done to Gary Booysen. That brings you to the dozen next time. And then if he gets to number 13, we'll see what happens after that. Good night.